Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss the current corporate earnings season and what it means for the economy and tariffs. This corporate earnings season is particularly important for investors as companies are now reporting how tariffs are affecting their operations. While markets have hit record highs, questions remain about the impact of tariffs on businesses and consumers. The good news is that many companies are beating earnings expectations and new trade agreements continue to be announced. Over the next few minutes, we'll explore what the latest data and figures suggest about the stock market and economy. First, let's focus on the positive. On the whole, companies are delivering stronger results than many analysts predicted. With about a third of major corporations having reported their latest quarterly numbers, 4 out of 5 have exceeded earnings expectations. Overall, earnings growth is running at 6.4%, which is notably higher than the 4.9% that was anticipated. What's particularly interesting is how businesses are navigating the current tariff environment. Despite facing tariff rates at levels not seen in over a century, consumer spending patterns have remained strong. This suggests that many companies are choosing to absorb some of these additional costs rather than immediately passing them on to consumers. However, the tariff impact varies significantly across different industries. Some sectors are feeling more pressure on their margins, while others, particularly those that benefit from reduced import competition, are actually seeing improved results. Next, as this chart shows, the S&P 500 has reached many new all-time highs this year. The momentum has been particularly strong recently, driven by companies reporting better than expected earnings and announcements of new trade agreements. While investors may worry about potentially stretched valuations, it's important to remember that new all-time highs are a natural part of economic expansion. That said, some economists are expressing concerns about how trade policy changes might affect growth, with some estimates suggesting potential impacts on the overall economy. However, businesses have shown remarkable ability to adapt, especially when they have more clarity. Looking ahead, Wall Street analysts are predicting solid earnings growth for companies over the coming year, with expectations for even stronger performance as global trade conditions potentially stabilize. Finally, the stock market tends to follow earnings over the long run. As this chart illustrates, when companies consistently grow their profits, their stock prices typically follow suit. Strong earnings fuel investor confidence and support higher valuations across the market. Now we're seeing some companies face headwinds from current trade policies through higher costs, while others are benefiting from reduced foreign competition. This mixed picture reminds us of why diversification remains so important for investors. What's encouraging is how adaptable businesses have proven to be. Companies are making strategic investments, improving operations, and adjusting their supply chains to navigate to these challenges. For long-term investors, the focus should remain on the fundamentals, companies that can grow their earnings consistently over time. We hope you found this update helpful. If you would like to discuss tariffs or earnings and how they affect your portfolio or the market in any more detail, please don't hesitate to reach out. We look forward to speaking with you.